hacer inversión en te das plata, ¿no? De modo que mandas el IRS aunque sea por adelantado. Y así haces tu plata y al fin de año pues le pagan lo que debes. Depende, siempre y cuando no sea mucho. Siempre te la llevo, señor.
Sí, siempre me lo llevo.
¿Y el gente hizo los taxes ya o todavía no?
Sí, no, sí, siempre me hizo eso.
¿Sabes cuánto están ofreciendo por esa tabla?
Hi, Leanna.
130.
Good, how are you?
Good morning. I went and grabbed some bagels. Doris said, let's go get some food. How are you this morning?
I'm good, and you?
Good to see you. Just thought, did you need me to print anything out or?
No.
Just kinda, okay,
Take notes.
good. Okay. There's bagels. You guys want any bagels? I know. I love them. Let me grab.
Por el primer empleado es gratis, pero ya por que hay delante se cobra de todo. Este es un museo, estamos hablando de todo. Nosotros tenemos a nuestra hija también.
Are you teaching? No, Steve is teaching. Oh, Steve is, okay. And I am hosting. Okay. So you're. Does anybody want to get bagels before we get started?
No, maybe. So,
No? Fine. Steve, you want a bagel?
No, no, I'm good.
You good?
This one?
Yeah,
This is chocolate.
No.
Chocolate.
No chocolate.
This is a raisin. It's okay. Boy, yeah. You have the plate or anything? You're good? Okay. Yes, so she starts on the 23rd. Even though I still haven't, I need a pin from the IRS.
Yeah, we submitted it, and it'll come to you.
Okay, bagel. So I have to, I still have to process things for my, I'm gonna do that today, is the goal.
Because I need to know what the payroll is.
Yes, I would love to get to have all that by,
That one's already
by the, ready before she gets her paycheck, right? So we speak and then put myself on payroll. Put Doris on payroll.
Don't call me, I'm ready to have a bagel.
More of us, right? And,
You like a bagel?
I'll get it.
You sure?
Yes, thank you.
It doesn't matter.
Thank you.
Those are the new rights for work by weekly.
Gotta make sure.
Sorry for us by.
There's a few sheets in this.
I don't know, I'm not used to anything like that.
Carlos, what kind do you like?
My commission.
Hey, any way you want.
Ahí lo están haciendo. Ahí lo están haciendo. O vaya con Víctor, está más fuerte o le estaba
Because normally how.
Gotta make sure they work.
Right, pues.
Oh, I thought you were like.
I know.
All you have to do is tell me what your personal monthly bills are.
Right.
Like everything bagel? It's right
Okay,
here.
so
Or the
we
sesame.
over that.
Oh, yeah, there you go.
And
Right
then,
here. On the side of it.
what about bonuses?
Yeah.
Like,
Whatever, you just tell them, you can do so,
okay, all right. And then, thoroughly.
No pasa. Sí.
Order.
Ya estoy tratando de que quiten los de arriba para ver los de abajo. Es el que viene quiere, pero le digo, no lo puedo agarrar yo porque.
Oh, toaster oven.
Oh, fine, pick up. So I need to have that, and then I give her the trust, the living trust.
A mí me gusta.
Toaster.
¿Para la mitad quieres?
I wanna have all that out the way.
¿Te ayuda a partirlo?
Do that
¿Que
whenever
tenga
you're
los de?
ready.
Okay,
Que tenga los de.
It's fairly simple.
right, exactly.
Ni modo. Me llevo yo eso.
So just remember, everything goes in the front.
Yes,
Everything that's in your name goes in the front.
right. Okay. Perfect. Did you find it?
Ya, almost getting it, it's right here. Dios mío.
Looking for a special one?
And she's
Yeah.
one.
The cheese one?
Yeah. Woohoo. Thank you.
Okay.
You know what one?
Yeah, I got this little piece. You know me, I'm working it. Isn't that everything bagel? Steve, you want some?
No, I'm fine, thanks.
Oh, sorry, sir.
No, I'm here. It's all good. Yeah, I'm
Oh, go ahead, go ahead. I'm gonna get my little piece of it.
We'll get started once everybody gets back in.
Sure. You just want me here?
You're welcome. You brought me here?
Yeah, I can see.
I did not see him.
Haven't
Did
seen
you
him
talk
either.
to-
Well, just say hello.
Yeah.
I didn't see Amy or Mike when I was walking around too. I didn't see them. Call me if you need anything, okay?
Sure.
Okay, did you talk to Steve about your taxes?
No, I haven't, no, but you, like, I have to set up an appointment for me. I'll do my taxes.
For 18?
And 17, huh?
I have an extension. Yeah. Yeah, I have extension. I think, I forget her name. She sent me,
Shauna?
she did the extension for me, so I have to make the appointment. So my boss to make them before,
October 15th.
no, before the end of this month.
Okay. Well,
Yeah.
October 15th is key day.
Yeah, yes.
Supposedly.
It gives me anxiety.
You guys bought us breakfast? How cool.
Are you gonna be in the class?
Oh, maybe for a little bit.
Better be.
I know Steve
All
already.
right, Steve, I'll see you, okay?
Yeah. Okay, just let me know.
I'll set up an appointment with her.
Okay.
Because she did the extension for me, so I have
Yeah,
to
just
set
let me
You
know.
start toasting
Yes.
them? Go ahead.
Well, I went in a rush, so.
Did you go to Western maybe? Panera Bread.
Panera. Yeah.
Did you get a cheese one in here?
Oh, she took it.
She did?
Yeah.
There should be more.
I know those girls are.
Yes.
Doris
Here you
took
go.
it.
Are you gonna join us for the class?
There's
Good.
gonna be-
There's bagels, if you want any, a bagel.
Beautiful.
Oh,
Me hace sentir más chaparro.
No, porque tú traes flash. No traemos
Sí,
este.
yo traigo flat, mira.
Ajá.
Sí.
Oh my God, these shoes are- they are so comfortable. Hi.
Hi, how are you?
Blanca de León.
I think
Thank
from
you
that
for
point on,
answering
you'll
my
understand what
email.
Sure, can I help you?
It's not, it's not that true, it's just I'm,
Ay, ay, ay.
I
Hola,
have
señor
my
Chirino.
husband.
Hola, señor Chirino.
so mine is, your husband what?
Wow.
My husband, he's the biggest. Oh, yeah. But I'm learning how to set out your
That's good.
payments and bills.
It's,
And but the real estate, I feel, just no learn. What do you think you're lacking? Are you doing the coaching, activity coaching? Huh?
Coaching, but I asked a computer, last time there's a Daniel, right? Daniel, he has a program.
Uh-huh. Why don't you try the coaching?
You need this toasted?
Sí.
No.
¿Cómo está? So I just feel so,
Yeah, Doris got the good one.
I'm struggling.
You only
I
cheat one
believe
in there.
or not,
Yeah,
please.
pretty well.
Yeah, you're good. Good.
Someone
To question.
yeah,
you
or
need accountability.
yeah.
You want half of my bagel?
No.
Yeah, you do. I'll give you half.
Okay.
That's a cheese one there.
That's cheese.
Oh, so there was one.
There was one, she
I
got
can't
it.
believe there was only one. I told them to put extra cheese.
One what?
Cheese bagel.
Oh, that was mine.
Those are the best.
That was yours too?
Those are the
Yeah,
best.
Was mine too? esposo.
Quítate los lentes.
Oh.
¿Eh?
No veo tan bonito.
¿No tomaste nada de tomar?
So, café.
Venga, traigo.
Por eso, la vamos a poner para que ella se
Como Texas,
entonces ella figura con como la situación del account.
About 4 times so we in and out.
Okay,
I know there's half a few people.
I'm sorry, I told that too. Alright, good morning, everybody.
Morning.
Good morning.
Morning.
So, thank you for joining us today for the CPA class.
Woo.
We have Steve Florsheim, who's an amazing CPA accountant. He's gonna go over a few things about CPA, and any questions you guys have, feel free to ask him, okay? So we're just gonna kinda go with it. Thank you.
Thank you.
Thank you.
You know, it's a very good introduction.
Okay, great. Okay, usually I give a nice little talk and then I open it up for questions. So what I'm gonna do is, touch on just a couple things that, are real important, especially for this new year. And then I'll just open it up and you guys can fire away at it. Hopefully I can answer these. For those that are new and haven't seen me before, I do, Leanne's taxes, Sam's taxes, Amy and Mike, Ken, half the people in here. Anyway.
Hi, I'm Nico.
Nice to meet you.
Okay, so first thing is, I'm sure you all deal with people who are buying and selling investment property. I get the same question at least 100 times a year. How can I avoid paying taxes on the capital gain? Well, you can't. It is what it is. And, you know, I never could understand why somebody buys an investment property, realizes at some point they're gonna make a gain, and then tries to beat the taxes. You can beat it a little bit, but the bottom line is you're gonna have to pay, your client's gonna have to pay, or you if you sell it, taxes on the gain. The way the gain is calculated, just so we have an understanding, it's very, very simple. What you bought it for, minus what you sold it for, minus the escrow fees and closing fees and all that stuff. If you have to fix up the house before selling, all that counts. And then you add back the depreciation on the property, and there's your gain. So basically, if I bought it for 100 and I sold it for 2, I have $100,000 gain. Then I take off my escrow fees and all that kind of stuff. So maybe we get it down to like 80. And then we have to add back whatever the depreciation might be. Depends how long the property's been in force. If it's 3-4 years, might be $10,000. So now you have a $90,000 capital gain. The taxes on 90,000 are roughly about 18,000 on the federal level. On the state, probably 2. So you're looking at, on a $90,000 gain, you're looking at about $20,000 in taxes. It's all relative to how much you make on the property. If the property's paid for, and you're gonna walk away with, you know, $200,000 less the cost, and you have to part with another 20, you're still walking away with $170,000, $180,000 in your pocket. That's pretty good, and your taxes are paid. So, you know, you should tell your clients, if they're selling investment properties, there's probably gonna be a gain somewhere unless they're in the unlucky position that they sold it for a loss, and that's something different. That gets subtracted from your income, you don't pay taxes on it. To my knowledge, escrow gives everyone Form 593. You all familiar with that form?
Yeah.
Okay. What I tell all my clients is, when you get that form, don't sign it, don't fill it out, give it to me. Let me do it. The reason is because, I'm sure you're all aware, that the state of California takes 3.3% right off the top. So on a $200,000 sale, they're gonna take $7 grand, and they're gonna hold it for a year, or at least until you file your taxes. You may get it back, you may not. So what I do is I make sure that they don't take that 3.3%. When the escrow closes, and everything's funded, everybody's happy, we pay an estimated tax to the state of California, which is far less than what that 3.3% would be. So on $200,000, they would take roughly $6,600. Well, if I do it, it would probably be more like $2,200 or $2,300, and the taxes are paid. Everybody's happy, and the state of California is not gonna get upset. So, inform your clients that they don't have to use me, they should go to their own account, let them do it, if they know what they're doing. If not, you can refer them to me, and I'll do it, and make sure that they don't get stuck with that little fee. The other one is, there's a new, if you're aware of it, or maybe you're not, there's a new 20% pass-through credit for self-employed people, as long as you're in a legitimate business. So, what does legitimate business mean? It means that, do you have a business license, or are you trying to make money, or are you trying to make a profit, or are you actually running something, that's viable? Real estate people are considered self-employed. As long as you have a valid real estate license and you're in business, then you get the 20% credit. What it really means is, if your bottom line at the end of all your expenses, everything's done, is $50,000, say. Well, $10,000 is gonna be a credit against your income tax. It's gonna come off the top. And it's an automatic thing, everybody gets it, as long as you're, a qualified self-employed person or a pass-through S corporation or a partnership, LLC. All of them get that same credit as long as you're legally in business. The other one is, 2 more points I'm gonna do, then I'm gonna open it up for questions. The other one is estimated taxes. Nobody likes paying them. If you're disciplined enough to keep the money aside somewhere, and the end of the year, your accountant tells you owe $12,000, if you have it, that's fine. Most people I find are not that disciplined. So I would suggest that you do estimated taxes every quarter. Take your income, subtract some expenses that you know you have, and send it in. That way it's done, you have a nice credit at the end of the year, and you're not getting hit with that huge bill. And believe me, I get it. I get it that nobody wants to pay them and nobody likes to, part with their money. But remember, you're self-employed, so your gross income, it really doesn't mean anything. It's what comes after all the expenses. That's what you're paying taxes on. And a lot of people, when they get self-employed for the first time, they get a little flustered with the fact that, oh, I just made a $10,000 commission. Isn't that wonderful? Well, really, that's not the case, because you have expenses against it, you have living expenses against it, and you have taxes. So it's better, to me, it's better to pay every quarter. If you're, like I said, if you're disciplined enough, you can put the money aside in a special account, make some interest on it. At the end of the year, write the check, so be it, that's fine. But I would recommend estimated taxes if you're not all that disciplined. And if you do it right up front, as soon as you get that commission, tell your accountant, or if I'm your accountant, tell me, and we write the coupon and we send it in, then it's all done. Now you have, it's like getting a paycheck, you have your net pay right in front of you, and then you don't have to worry about it. Taxes are paid. Real estate people tend to do a lot of mileage. Keep a mileage log. That's the number one, when they audit Schedule Cs, which is what most of you are, mileage is a big one. The first thing they're gonna ask for, let me see a mileage log. They're never gonna check it. They're never gonna go say, they're never gonna say, oh, did you go see this property? They're never gonna go call anybody, but they wanna see that you have a book and or something that looks reasonable. Mileage is 56.5 cents this year. So for every 10,000 miles, you're gonna get a $5,600 deduction on mileage. Yes, sir.
That being said, I know that there's 2 ways to file for gas or mileage, and that you can itemize with your gas receipts, or you can do the mileage. It's one or the other.
Whichever's greater. Whichever's greater.
Whichever's greater, right? So if I drive a truck, so I get 10 miles to the gallon, obviously my gas prices are gonna be a lot higher. It's better to itemize.
I mean, it depends. It's a difficult answer. In your case, it might be more beneficial because you get a percentage of the actual expenses. The insurance, you get the fuel, you get the oil, you get the, repairs, and you get whatever your percentage of driving it paid for. you get that percentage. If that's higher than the mileage, then that's great. Just remember, 10,000 miles is almost a $12,000 deduction.
The thing with that is unless that vehicle is, it's just for the business, but other than that, you have to prorate too, because it's like, not all of your gas expenses is for your business.
It's what the percentage is that you use it for business. Who's gonna check that number?
Yeah.
Nobody, I know.
What do you recommend?
I work every day.
I've always been in favor of mileage. I've never really seen
Yeah.
actual expenses come up higher than mileage.
Yeah.
Mileage is a big deduction. So keep a logbook. The way you keep a logbook, I always tell my clients, if they're in real estate, from your house, come to Keller Williams first. Now, I'm not saying drive here. Make sure you put that in the book. Your first stop never counts. So always, you're going to the office first. From there, everything throughout the day counts, to and from. All
And
day
from the
long.
office to the house,
From the,
back in?
yeah, once you get here, everything counts. If you have to go home, that's fine.
It counts.
Yep.
No, but I have a home office, is that count? Because sometimes I do my office at home, and then I come to here, meet my client, and then I go to show the house.
All counts.
So that counts from my home office to Keller
The first stop does not count. So if you come here, going back, it all counts.
Okay, what about from my house to meet a client at a house, at showing them?
Stop here first. I'm just saying, I'm not telling you to drive here first, I'm saying put it in the book that you went here.
Oh, excuse me, I got you.
Put it in the book that you stopped here first.
Excuse me.
And let me touch a little bit on this young lady about home office. The Internal Revenue Service takes a very dim view of working out of your house. Why do they do that? Because you're a real estate agent, you're showing 30,000 miles of real estate mileage. Well, an office is something you occupy 8 hours a day, in their opinion, like a doctor who works out of his house, or an investment guy who just sits there on a computer all day long and never really goes anywhere. So you gotta be really careful about using your office as a home. Now, I deduct it on a different, I don't use, there's a schedule called Form 8829, you put your square footage and all that stuff in there. I don't do that, because it's a guaranteed look at it. As soon as the IRS sees it, they're gonna look at it. What does this person do? Oh, he's a plumber. Really? And he's in his house all day long? And then he says, then in the audit, he says, well, my wife works there. Oh, sorry. So I usually, on the other side of the return on Schedule A, I take the utilities and I take, the mortgage interest already counts anyway. And the property taxes, and I take some insurance. I basically put it in a space that they're not gonna go look at it. So you'll get the deduction anyway. Any other questions on that one? I mean, my advice is never put that on, and never put that on a tax return. I've seen it too many times. So make sure your accountant knows what he's doing on that end. The other issue would be continuing education, and then I'll open up for questions. All your continuing education technically counts. What I mean by technically is you have designated real estate classes that you have to take to keep your license, right? Like hours a year, something you have to take. So all that stuff counts. What I mean by the stuff that is a little in the gray area is I took my family to Hawaii to a real estate convention. And because I went to the real estate convention, is my whole trip deductible? Well, only for you it's deductible, not the family. And make sure you get a receipt or something from the seminar, or whatever it is, so that you can show that you were there for a specific purpose. I usually tell my clients, they always ask me, I'm taking the family to Hawaii, what can I deduct? And I say, you can only deduct you, but make sure you go to 2-3 real estate offices, grab a card, and that's it. Then we're good, we can deduct all of it. There's such a time when I might, depending on what I'm seeing, and depending on what the return looks like, I might take, maybe the wife or something like that as a deduction. But most of the time, it's just you go in somebody's real estate office, sit down, talk to them for 10 minutes, get a card, and walk out. and that's it. If there's a seminar in Las Vegas or Hawaii, wherever you're going, if you don't wanna go, just buy the ticket. Just show that you were, you know, there. That's all that matters. They're not gonna know whether you were in the class or not, they don't care. They just wanna see a receipt. So, other than that, questions? Fire away. So,
What constitute long-term capital gain?
1 year or more.
And what's the rate on that now?
It's 20% on long-term, 15% on short-term.
So it's better on short-term?
It's because it's flat now, it's a flat rate for long-term. And they cut it back, they're trying to encourage somebody to keep it longer. So,
You said business expenses like, so any continued education, real estate, so mentorships, any like things that's all considered,
what's a mentorship?
like mentorship programs that you pay for, like like classes and stuff like that, like coaching and stuff like that?
Yeah, those are all fine. It's all a necessity. See, there's two words that define expenses like that. One, is it necessary? And do you have to have it? So, if Keller Williams says you have to go into this program, or you have to buy the program or whatever it is online, whatever it might be, then you have no problem with that. But if it's elective, then it comes to the point of, is it going to enhance what you do? If that's the case, deduct it all day long. But you just don't want to say, you know, I went and, you know, I have a lot of entertainment clients who try to write off all their CDs and all their music. Well, you know, I have to keep up with the times and stuff like that. Well, you know, to a point, that's not really necessary, because the government knows that half the time they get that stuff for free. So, you know, you gotta be careful. As long as it's necessary, you'll have no problem ever proving it. I won't.
Thank you, Steve. Also, can you put, entertainment expenses?
Yeah, you only get half of it though. You only get half of it.
Half, just like the meals?
Same thing.
Half.
Meals and entertainment. So, you know, if you take a client to a concert, a baseball game, football game, you're gonna get half of it.
Entertainment.
Yeah.
Get hot.
Talk for 5 minutes about selling our house, and that's it. Nobody cares. And that's another issue. When you're at a restaurant with somebody, try never to pay cash. Government doesn't like it. Use a debit card, write their name on the back of it, that's it. You're all done.
Oh, write the name of the client in the back or in the front?
Yeah, it doesn't matter. Doesn't matter.
But then those receipts, they paid out by the end of.
Scan it.
You scan it.
What about gift
What do you
after,
do, Joanna?
gift after closing? Like after you close a transaction, you usually give your client a nice gift, can you
Yeah, we do those promotional gifts.
promote?
Those are fine.
Understand.
Just, you know, you just
It's all
gotta be careful.
expense, it's all part of the business. Anything that's related to your business or to your work is in some way, shape, or form deductible. Some things are more deductible than others.
Yeah, I mean, like referral fees, they take a very dim view of that, unless you 1099 them. So that brings another issue. If you're doing referral fees, they'll refuse that deduction every single time, unless you 1099 that person. One second,
Okay.
so, I've touched on this many times before. If you have, say, a maintenance guy that goes around and he fixes things, like I'm sure you've all had, where the client won't close escrow unless you buy a new water heater. So you call your maintenance guy and he puts it in for you. Well, if you pay that guy more than $600 in a year, 1099 him.
More than 600, but 599, 999, no.
Then you're okay.
Yeah.
So, but make sure you 1099 them, because they're, you know, it used to be the slack was like this big, nobody cared. Now it's starting to tighten, and they're starting to check this stuff. They even put a question on the returns now. Did you pay expenses that would require 1099? So when you answer yes to that, or when you answer no to that question, the first place the computer goes and looks well, what does she have, what does this person have under, you know, consulting fees, referral fees, repairs and maintenance? You know, and that's how they look at returns, that's how they look at them and see if they're.
Consulting fees could be what?
If you decide you wanna get into commercial real estate and you go talk to some big real estate, commercial real estate lawyer about how to structure it, how to do it, or an accountant, that's consulting fee.
And for gift cards, it's $25 for a gift to anybody, gifts, anything, thank you gift, like just a realtor, or a lender, or a client, or thank you. Is it only up to $25?
No, I mean, you can make it 5,000 if you want, it's up to you.
So
But
this is expensive.
if you're gonna give, someone,
Times 600.
if you're gonna write them a check, say, you know, I just thank you for that nice little $200,000 commission I just made, here's 5,000 bucks, if you write them a check, 1099 it. If you give them a gift card for that much money, then it doesn't matter,
I can still claim that gift card for 5,000?
as long as you keep a receipt for it, and put their name on it.
Receipts are a key point.
Mhm.
So,
Because the gift card doesn't have a name that it's given out to like a check. And if you write a check, it'll have that name of that person, so that's when you 1099.
Well, I usually buy like 20 gift cards. Like I buy like a lot of gift cards, so I have them.
Mhm.
So how do I buy all the names? Like, you know, the birthday gifts I buy, I buy them for like 6 months in a row. So I buy a lot of gift cards, and that's like a large expense at once. But my question is, how do I put in like everybody's gift name or whatever at that receipt? What's the best way
I
to do
usually
it?
have people use, Excel, and I just spent, you know, $600 on $25 gift cards, and every time I give one amount, write somebody's name in it.
Oh,
Just put somebody's name.
um,
I mean, this is not stuff that you know, that's written in stone and you have to do it. These are just ways that you get in an audit, somebody says, well, what'd you do with these?
or I can put all the names, right, if I want to.
Yeah, you know, how do I know you don't give this to your grandkids?
Yeah, that could be too.
You just, if you have something that shows it, they'll let it go all the time.
A good app to use, I use Expensify, there's also QuickBooks too, where you can take pictures of every single receipt. So,
Is that an app?
yeah, you can take pictures of every single receipt and it logs it automatically.
phone?
And then, yep, and then when you're done and ready to file your taxes, it sends your CPA a spreadsheet of everything that you've entered.
Oh, wow, that's awesome. That sounds like awesome. I'd rather just take a receipt, scan the receipt,
Expensify or
and then,
QuickBooks has their own
and
version
then
as well.
copy my Excel sheet of all my birthdays that I have for that month and put them together.
Expensify.
That for me is easier.
That's fine, as long as there's just some track that if somebody catches it, that you can go look at. And by the way, audits are random. Don't let anybody tell you that they just pick your name out of it. It doesn't work that way.
Audit.
They're random, and they're based on percentages of real estate people or whatever your job is in a certain area. Like you're in Palmdale, this is still considered LA County. So they take all the real estate agents in LA County, they lump them into one big percentage, and they average it out. Some are gonna make millions, some make less than that. And if your expenses fall within the average that everybody does, no problem. If it falls outside the range, then somebody looks at the return. Most of the time they let it go. But if they see something they don't like, they send a letter out. We want to examine your return.
Going back to the gifts, they said if your name is engraved in the item, you claim 100% of that
Yeah.
expense for that client, for that closing gift,
Mhm.
because your name is,
That's why it's always better to do it on an individual basis.
like Cutco company, the knife company,
That's actually considered advertising then, isn't it?
Sort of.
Yeah.
well, that I consider as I already claim it as advertising, but now, oh no, I cannot claim it twice, the same, oh, no, that's right.
You
Oh, that's
can,
right.
you can, but you get out.
There's
No, never
there's
mind,
no
never
double
mind.
dipping.
No, because I already claim it as an advertising expense, right? And now, I was just thinking about that.
Well, it is what it is, but in the scope of things, it doesn't matter. If you put it under advertising and they determine it's gifts, it doesn't change anything. It just goes from one category to another.
Yeah. No, I was just thinking like for one item, you personalize it at the
You can
mall.
do that.
then that's 100%.
You can
But
do that.
Catco, I already paid and I already claim it as, advertising.
It's okay. It is what you think it is, because you're doing it.
Yeah, you have to,
And, the new thing with audits are, if you happen to get one of those letters, is they do my mailing. So I instruct my clients, when you get that letter, if you get it, you know, give it to me, and, we start the process. I mean, we never wanna do things by mail, because they lose them. You don't have a chance to argue with somebody or make your case. They just arbitrarily, well, I don't like this expense, out it goes. And then you get the letter in the mail that says, we have made adjustments to your return and you owe us $6,000. So we do it to where, or I do it to where we actually sit down with somebody right in front of them and go over everything right then and there. And I never have the client go ever, because you'll say things that you shouldn't say. You know, that's it. So unless it's absolutely necessary, they never go wrong. The other issue might be, for those of you who are starting to earn, you know, making really good money and you're gonna get up over 100, you might wanna consider incorporating it. I just did one for Ileana. Steve Burton is already one, and Garrett Rowe, and Amy and Mike. So you might wanna consider that. What are the benefits? You're a Schedule C filer at this point in time. Schedule C filers are subject to 13% surcharge on their income, meaning self-employment tax. So if you make $10,000, there's income tax and there's self-employment tax. S corps don't pay self-employment tax. They only pay income tax on whatever your profits are, and you still get the 20% credit. What we do with S corps is now you're gonna take a payroll check. You're not just gonna take money, you're gonna take an actual paycheck. You'll get a W-2, and your taxes are virtually paid at that point when we do your taxes. So it's something you might wanna think about. Jessica Dixon's another one we just did for her. Yes.
So when you have the S corp and you pay yourself, obviously, you're not, obviously, you know, because having the purpose of an S corporation is to save on taxes. When it's time to pay yourself, how much it is advisable to pay yourself? Let's say, you know, you had a commission of, you know, $5,000. Do you pay yourself like 60% out of that, and 40 it goes like in allocation or distribution?
It doesn't really matter. I usually tell my clients that, tell me how much you need every month to survive, your personal expenses, and that's what we do the payroll based on. If you need more money, just call me and tell me, I need to raise my pay.
so you put your expenses and then how much do you want for me? For, you know, how much cash do I want additional for me?
Right.
So you just add that up.
Right. And then we
Let's
give
say
you
your
a check every
expenses
week,
are-
every 2 weeks, every month, whatever you want.
Oh, okay. Let's say your expenses are $2,000 a month and you pay yourself $3,000.
Yeah, because after the taxes are paid out of it, then you'll get your two.
Oh, okay, so whatever I pay for me, on top of that $3,000 I mentioned, I have to pay taxes?
A better way is to say, is you're gonna tell me that I need $2,000 a month just to pay my bills, and I want another $2,000 for me, just for spending money.
Spending money.
So that's $4,000. So I will probably, calculate it out that your gross pay would be $6,000 a month. After we pay the federal withholding and stuff like that, you'll end up with $4,000. And your taxes are already paid.
Oh, okay.
Question about that. So if, you're on payroll, right, and you're getting, you pay yourself every 2 weeks, but you haven't closed an escrow this month. And you're on, you know, you're getting paid every 2 weeks, so where's that money coming from, like just whatever you have saved? You're still paying yourself?
Pretty much.
That salary?
Or you just tell me I didn't make a commission this month, so don't pay me.
Okay, so you can skip,
Oh, yeah. Yeah, payroll's whatever you want.
Now, going back to that, you know, the example with her,
That's change.
there's like, because the more you pay yourself, the more taxes you're gonna pay, cause how much is it 15, or a little over 15% that you pay in tax?
On federal withholding,
Yeah.
it just depends on your pay.
Well, no, it's your income and your social security and your Medicare, so it's about 15%. So half of that is paid by, if you're a W-2, if you work for somebody,
For,
you know.
for every $1,000 of gross pay, you can figure $430 of that will go to taxes.
Okay.
And you'll end up with 507.
Could you say one more time, 1,000?
If you have $1,000 of gross pay,
Uh-huh,
okay, like you tell me, I need, $500, so I'm gonna write the check. I'm gonna make your gross pay $1,000. Federal withholding, state withholding, Medicare, Social Security, and state disability off of that check, which is probably right around 43%.
43?
Well, we add it all up.
You're like, whoa.
No. Federal, 6.2, it is the social security, and Medicare,
1.45.
1.45, yeah,
Then SDI,
yeah, STI is
SDI is 1%.
How much do you charge for a corporation?
To set it up,
To set it up?
1% STI, right?
I'll come back. But you have federal and state income tax withheld, you have to do that too. The federal and state taxes,
STI 1.7,
no, it's 1%.
1%,
SDI is 1%.
so this is 1%. So total will be,
43.
yeah, 43.
I mean, that's probably a little bit high, but don't forget, you have federal and state withholding, and those numbers are predicated on how much you earn for the year.
Yeah.
They may be less than, your percentage may be 30%. 43 is just a high number, that's what I wrote it down. But remember, state withholding is 9% by itself, and federal is probably gonna be somewhere between 15 and 23. So it's the same thing, it's the same thing you're paying, when you do your estimated taxes or when you pay your taxes at the end of the year. It's the same thing, except you're doing it all in one lump sum, I'm doing it every week or every 2 weeks. And it comes out to be a little less because of self-employment tax.
So you talk about the real estate self-employed, another 13% plus.
No, I'm avoiding that because we don't do it when you're an S corp. Am I confusing you?
Yeah, because I got the different numbers, so I try to figure out.
It's all relative to how much you get. If you're gonna make $1,000 a month and you're only gonna make $12,000 a year, then your percentage is probably closer to 20, because we don't need to pay federal withholding, because your income's so low. But if you're gonna make 80,000, that changes the picture. Now your federal withholding is probably more like 23 or 24% by itself. The state is another 9, so there's 32% right there. And then you got Social Security and Medicare. So it's all predicated on what you think you're gonna make.
Related to someone who works during that year, W-2 and 1099. When they go file their taxes, is there a certain amount that they have to make in W-2 and in 1099 to qualify? It's like 10,000, 15,000, and 1099 to qualify to file taxes? Not counting that in W-2, they made another portion. How would that go?
Anytime you get a 1099, if your income is over $1,000 on a 1099, you have to file a return.
Over 1,000. Oh, in a W-2?
W-2, if you just have a W-2, if there's federal withholding, regardless of the amount of how much your income is, you wanna file that return to get that money back. You don't wanna give it to them. But technically speaking, if you're married, it's, 24,000. Up to that amount of money, you don't have to file a return. If you're single, it's 12,000
12,000 to file or not file?
to not file. So if you have a W-2 for $22,000 and you had no withholding taken out, you technically don't have to file a return, because it's gonna be zero anyway,
Okay.
if you're married,
Because your deduction is 26,000.
24. And if you're single, it's 12.
But if you get paid 1099, 1,000 or more, you have to.
Yep, because they're
Wow.
self-employment tax. You had a question for me, I'm sorry. You,
Oh, about corporation, how much do you charge to set it up?
I don't charge to set it up. I just charge to do the payroll and to do the income taxes if you choose to use me.
Okay.
It's $543, like I said, that's a state fee.
Okay.
That's welcome to California.
All right.
Any other questions?
And if you, how much do you charge for the payroll?
To do the payment.
To do the
Like if
payroll?
we do the payroll with you, like how much the monthly payment?
If it's from 1 to 5 people, if it's weekly, it's $100 a month. If it's twice a month, it's 50.
Can you say? No, he didn't understand
If
what you
it's,
said.
if it's like realtors that you don't.
If you're gonna get paid once a week, 2 of you, once a week,
Uh-huh.
it's $100 a month.
Okay.
If you're gonna get paid every 2 weeks, it's 50.
How about once a month?
What do I do this for? 30, I think, $35.
Okay, because we get
What
paid
about once
once.
a quarter? Like Juliana was saying, you know, a realtor, you don't get a check every month.
You can check whatever you want.
Ileana does.
But she hasn't done it yet.
You should
I'm
be.
just kidding.
Yeah, they
Goal.
know that.
You are coming.
That's the goal.
I'm sorry, see, that's payroll, $30 per couple?
Check
$30
per person.
for one
I
check?
mean, if you're gonna do it once a month, yeah.
So
per
30,
person.
30 and 30?
No, 30.
30,
For up to
and that's
five.
called
Up to
like
5,
payroll,
1 to 5.
Payroll.
If you're gonna do it monthly.
monthly.
Yeah.
And if you have 5 employees, or what do you say, like 3
I'm
and
just saying, if you
5?
have 5 employees and you're just cutting one check for each of them a month,
Oh,
$30, you can start
ah,
every 2 weeks.
employees, it is employees on payroll. So for us to hire somebody, it's recommended to hire them, like let's say I wanna hire an executive account executive. I need to hire them with a full-blown medical insurance.
You don't have medical insurance.
Huh?
You don't have to offer medical insurance on an employee unless you have 25 employees. Under that, you don't have to.
Oh, okay, so, and if they're unlicensed, I mean, the
Doesn't
workers'
matter.
comp and all of that, I mean,
Workers' comp, you have to.
I have to pay workers' comp, and what else?
That's it.
No social, no SSI,
All that's taken care of in the payroll.
for them. Oh, I see. Okay, so I'm only responsible for the workers' comp,
And the federal and state taxes, that's it.
and as long as they know that they're not getting medical, I mean, you have to know that they're not. Okay, 25 employees or more, then you have to get it.
Then
Do you take-
mandatory.
Do you take out the federal and state taxes and all of that stuff?
Well, yeah, and we pay. One thing, that used to be very, very easy to beat, if you were it was ever picked up. Get a lot of people who, you know, I moved into my house on August 1st, and I found a better house, and I've only been living in it for 7 months.
You wanna sell it?
Well, yeah, I wanna sell it. How do I not get capital gains? Well, it used to be that we could, just put the different dates down there, nobody ever cared, nobody checked, and that was the end of it. Well, now, apparently, the IRS now has reciprocity with escrow offices, meaning they get the same report that you give to your client, the final closing. So when you sell that house and you put August 1st down, they have the same information. So you really can't, you know, somebody comes to you and says, I've only been there 7 months, how am I gonna beat the game? You just gotta tell them tough luck. Stay there another 12, 13 months, you'll be fine. One second. And they're gonna get sucked for that gain. So you have to stay in a property, personal residence I'm talking about now, 2 years before you sell it to beat any capital gain.
But that's subject to the there's a change of rule, like if they're sick or they're like, what is it called?
Well, there's hardships,
Yeah, like it could be subject to.
there's
depending
hardships
on the
and
situation.
Job relocation?
and job relocation
Okay,
is another
okay.
one. But for the most part,
General.
if they're in there less than 2 years, they're gonna get hit.
So with that,
Well,
2
before
years.
you- yeah.
I thought there was a stipulation if you were using the money to upgrade to a greater property, that it wouldn't be, that
No.
it could be, no?
Not true. The only time you get anything like that is if you,
1031.
well, I'll get to that one in a minute, but if you, just lost my train of thought. Oh, yeah, if you take money from retirement to buy your house, first house,
401k.
you can beat the 10% penalty,
Oh, really?
only if it's a personal residence and it's your first house. Other than that, just because you're gonna upgrade, no, there's no provision for
You should
that.
do the buyer's
You're gonna get
401k.
stuck.
So you can beat the 10%.
Yes, sir.
Mhm. So,
The, going to the living in your primary residence for 2 years, it's 2 out of 5 years.
Mhm.
Right, but what if you buy it as a rental and you rent it and then you move in and then you sell the property, does that count as your primary residence? And
As long as you're in there for 2 years.
so first could be a rental, and then you can live in the property and that will be your primary residence and you live for 2 years.
Yeah, well, let's say you buy it in 2020. You happen to go 2025 to find 2 years in there to live in it, then you can beat the capital gain.
Do they have to be congruent?
They have to be consecutive years.
Yeah.
And
And
you
you have
have
to-
to file it on your taxes,
Oh,
that is the primary, right?
Yeah,
You can't just say that it was your primary residence.
you have to show it, and sometimes they ask for bill, let me see utility bills, so make sure all that stuff goes there. And, you have to pay taxes on, no matter what, whether you live in it for 2 years or not, you have to pay tax on depreciation on the rental part. But it's really minor.
In 3 years, you'll pay in 3 years, or whatever.
Yeah, I mean, it's a small amount, it's a small number, but you have to do it.
Now, the depreciation, you have to take that?
Yeah, it's one of the more stupid things
Yeah.
that there are, because basically what they tell you is, you have to take depreciation on the property for however many years you use it, but then you have to add it back when you sell it.
Yeah.
So what's the point of taking it? And I've already found out the hard way that if you don't take depreciation,
It's still
because of that, they're gonna make you take it. They're gonna make you go back and, you know, which is in your benefit really, because it lowers your taxes and you might get refunds. But then they tell you, we're not going back past 3 years for the refund, so too bad. So it's better to just do it up front.
so there's no benefit if you're owner occupied and you sell your house a year later, you,
Depreciation is no benefit except in the short term.
no, to avoid tax, to avoid that capital gain.
No.
To avoid.
No, you're not gonna avoid it, unless you have a loss, then you can avoid it. Now, on 1031 exchanges, I'm not a really big fan of it, because
I'm not either.
all you're doing is you're deferring a tax
Yeah.
to somewhere down the road.
Mm-hmm.
And if you have a gain of $100,000 on a property that you want to exchange, well, now the basis of your new property is gonna be $100,000 less, which means you're gonna pay more tax down the road. And who knows what the rules are gonna be down the road? Maybe higher, maybe lower, who knows? But the reality is, if you just pay the gain, it's done, you're over it. You don't have to worry about it anymore. The only time 1031 exchanges work is if you're an elderly person and you have heirs, and you have all these properties, and you wanna sell them. You put them in a trust, and when you pass away, the heirs get a stepped up basis. They get the basis on the date of death, which means you just beat all the capital gains. So that's when it works. You know, if you're in your 20s, you're obviously not gonna hold it for 60 years. You're gonna try to, keep the ball rolling and make money. So it does work in a trust when you're elderly.
60, 65 and up. What each grade, what each group
But people, you know, they love doing it, they don't wanna, I don't know why, but,
They got the misconcept,
yeah.
but I don't know, I'm with you. I'm like, why not just pay taxes now, what's the point, you're gonna pay sooner or
Still
later.
gonna pay one way or another.
Yeah, and they have to pay a fee for that company to hold the money. And they have timelines, 45 days to identify the property, and the timings is like, oh.
And that's all checked now, they all have the ability to check that stuff.
Now, for an investment property, let's say I invest in a property, and to pay the capital gains and to pay my taxes, can I do it as soon as I know my expenses?
Yeah.
Go to my CPA and get it taken care
Yeah.
right there on the spot?
Yep.
And instead of waiting until the end of the year,
Yep.
is
You can
recommended?
pay as often as you want.
Okay,
They don't
because I'll bring you all the information, this is all here, how much do I owe?
Yep, that's it, it's all done and paid for. Any more questions? All right, well, thank you for having me.
Thank you so much,
We'll
you're
have your
amazing.
business card?
Yeah, and I'll stick around.
Thank you, Steve.
Thank you.
Thank you,
Yeah, I have a
Ileana.
question. Thank you guys for coming. Marvin looked it up,
I've
and
been told 58 cents, it's 56 and a half.
for the gas.
It's for 2019?
Que vamos a hacer un lado ahora, ¿qué onda?
I haven't heard that one, but it's possible.
That's what I'm writing it off at, so I hope so.
Maybe it's going up.
Yeah.
I mean, it could be, I don't, my next update that I get is probably in about 2 weeks. So that could be right.
¿Ustedes cómo lo reclaman? ¿Con
But
los
as
del
of
mileage?
through 2018, it's 50.
¿Cuáles son las opciones? ¿El mileage o
55,
cuáles son las
54 and a half.
54 and a
Or
half.
action, no, se llama action,
It's up to 54
se
and a half.
llama,
What about when you buy gas? Look at all the taxes that you pay when you buy gas, you don't get to write that off,
You're writing off the whole price. You are right.
you're writing off the whole
I
price.
didn't hear your question, sir.
Well, you might have answered, you write off the whole price.
In your case, you're an escrow, so yeah, then you take all the action.
Hello. He was talking about the difference between taking actual expense.
And then you get your you write off.
I'm gonna come by and I'm gonna say, Steve, this is what we got for the whole year, I got it.
Let me see your cards, so I can pass them off.
A mí me gustaría, como cuando
$12,000
showing properties, que lleva de una propiedad a otra,
No, we got
que ya viene grabado ahí como el pues.
So if you tell me like, hell, I can pay for all the other stuff, I can use the miles, that's like 10, 11, 6.
Yeah, I got it.
Hacer un audit de todo, de las vías de casa a casa.
I just started saying
Cuando ya
this.
hagan los taxes, pues, más.
I've got to make my.
Igual lo puedes
Mileage, just to do the
igual lo puedes
deductions.
hacer en el año, si te conviene, pues podemos
Anything,
usar las mías que
any advantage of your C corp is you don't have
Alguno se llama mild ID y el otro
a C
se
corp for
llama
22 years.
No, pero no me gusta escribir como dice,
I mean, if you're okay
Mild
with
ID,
it, yes,
lo
or
único que haces es
just make sure you
pay
it.
cuando vas a tener tu casa,
So, yeah,
entonces
but way back when I did it, it was more advantageous
es fácil
because
de
you could write
calcular
off
cuántas
stuff.
millas manejaste,
Most that's
entonces
changed.
But you can get the 20%
cuando
credit.
llegas a donde
You don't get a
vamos a
C
usar la
corp.
casa, acuérdese que el señor dice de que
Have to
los
make
primeros
that
pagos,
calculation.
¿y cómo la vamos a hacer? Tenemos que poner la de la dirección de la oficina.
It's been applied for.
Pero cada que digo que
So you'll get a letter.
lo que legalmente tiene que hacer, pero no necesariamente.
Let's do back tax, like, okay,
y
you don't have it, so
Sí,
much
sí,
money
leer,
the
por
last
ejemplo,
few years,
nosotros a
and I paid so much in taxes.
You know, we
And
can't,
or am I just like,
we need, we're gonna go
Es
back.
lo que dijo él.
Yeah.
No.
Si tienes una auditoría, ellos quieren ver
We're stuck in fire.
pruebas, no es que vayan a.
Moving forward, we're saving lots of money.
Quieren ver que de veras
en el app,
you took the time.
en la app lo que hace es que
All right.
prende, entonces ahora es la casa
and,
a mi oficina. Estás buscando lo voy a prender, cuando sale, entonces te graba el día que acá.
You use it.
Pero así
Thank you, Steve.
Está using it now.
Porque lo que pasa es que no tenemos, pero si la es claro, podemos escribir un montón de cosas.
Sí, sí, estimadamente basado en el fallo del carro.
There's two ways, you can go to, you can go to Staples and get a mileage logbook, and then you gotta fill it out by hand. Most of my.
Ya lo tiene programado, from point A to
Excel,
point B.
Excel adds it
Yeah.
up, you know, it totals, and that's fine. Computer do it, you can do it on your phone, I think. Those are all good.
We said always come to the office first.
Always come here first, here, everything counts, and all you really have to put on the thing is, I went to, you know, some street in Palmdale and showed the house, that's it, it's done.
When you do an open house and you buy snacks, let's say you spend $25 each open house, can you claim that?
I write it all off, every bit of it.
From Costco or Smart and Final, anywhere. You just put the open house, what open house you had, right, like the address and the receipt.
Yeah, usually I tell the client to just make sure you have some sort of backup showing that it was
Right,
for an open
MLS,
house.
we normally
That it
do
was, that's it, and as long as there's some record that shows it, you know,
And where will that go in the taxes, as expenses of what?
goes under open house.
Remotely.
Yeah, we do that, right? No, we do. I mean, what do you put it under, open house, or you put it under marketing? Marketing.
Well, I mean, you can put it anywhere you want, it doesn't really matter, it's up to the accountant. I always put it under open house, so
Yeah,
it's
he doesn't put it under open
designated to see it. You know,
But we do, we can claim.
this is in the course of what you do, they know you do it, they know you do open
Real estate,
houses and those things, so.
So it
Those
applies.
kind of things, they go through, because they know, you know, unless you're gonna, you do $50,000, that might cause a problem.
A red flag.
You know, $3,000 or $4,000 for a year, something like that, nobody's ever gonna look at it. They don't-
So, now, what if, like, under meals, like,
Oh, I am
let's
right
say
now.
from here, we came here and we have to go, you know, we stop by Dennis. What, does that mean, does that count as meals or one of our business expense?
You mean from here to, I mean, from your house to Denny's?
No,
No, the
after-
expense, the
after-
meal expense, can it apply?
Well, yeah, because you talk real estate, right?
Yes, we always do.
Yeah, of course.
Anytime you talk
Or
about
your
real estate.
business card too, right?
Yeah, the only time meals and entertainment ever become a problem is when you start paying cash for it. Because they kick it right back.
Okay,
Use
okay,
a
this-
debit card.
This is a good one. What about, you know, expenses, like you do your nails, your hair, or makeup and all that? Can you claim that in your?
Well, I mean, you know, those are.
Professional look.
Those are, you know, reasonable and necessary. What does that mean? Well, for example, I get my nails done once a week, and I write it off. And I've been called on the carpet for it, and I just tell them, look, if you're sitting in front of me doing your taxes, you want to see something with ugly nails and dirt and all that stuff, and you let it go.
With dirt in there.
You know, or if you're an actress or a model, you know, those, no problem. I mean, I would have no problem doing it in a real estate case, but it's.
Cause you gotta look professional. That's part of the profession.
No, but that's.
I mean, to a point, yeah. I mean, I would say 75%.
Let's just say once a month, you know, we're not gonna go to the extreme. Let's just say what is standard, once a month, you know?
I would do it.
You will?
But-
You would?
I would write it, yeah.
As what? What type of
I would
things?
put it as personal grooming, probably.
Personal grooming?
Yeah, but you know what, but doesn't the IRS look at it as, you have to do that anyway, so why would you?
Yeah, that's what they
deduct
say.
that?
You don't necessarily have to do it
No, I don't have
anyways
to do
if
it.
you don't work in a profession like this.
I mean, people can do their own nails and they can do
Yeah, I
that
don't have
kind of
to do it.
stuff, but, you know, you just can't like take it overboard, you know, like do
Yeah.
your hair down a Rodeo Drive somewhere, you know?
Okay, a couple $1,000.
It's just, you know.
That's what I usually go.
It's what's reasonable. If you're gonna write off, you know, manicures, in this business, cause you're sitting in front of people, you're signing
See, I
papers,
have proof.
you know, and,
My nail, my hair. Your
you know, if you're gonna write off $800, $1,000
Massages.
a year, nobody's gonna look at it.
Right.
You know, you do 4,000, and somebody's, really, a real
Yeah,
estate
something if
agent?
it's really crazy number, it's like, whoa, where are you?
Well, you know, just a little something so we can add up, you know?
But
Like
it-
massages is also grooming?
Massage?
Personal massage?
No, that
No.
shouldn't be.
Oh, that's not.
But you know, look,
Come on.
I'm going to an extreme now.
it's relative. I have a real estate agent in Malibu, probably makes $8 million a year. We take haircuts, everything, and it never gets caught. And the reason it never gets caught is he makes so much money,
He pays a lot of
he
taxes.
pays a lot of taxes, nobody cares. You know, in your case, you're not making $8 million a year, so you wanna just kinda keep it at a decent level.
Yeah, but the grooming is not like thousands or hundreds a month.
I'm fine
No,
with it.
but a little bit, a little bit.
No, but I'm saying, I think it will be okay, it's not gonna raise a red
Right.
flag.
It's a presentation, you know, you don't wanna look like a slob with holy pants.
You won't have a job.
You know, nobody wanna buy a house from you.
And dry cleaning is not.
Yeah.
You gotta look presentable,
It has to be a uniform, like that shirt, that you could do.
See, we're gonna buy.
because it has what, the.
KW on it.
Logo, yeah.
But this doesn't need a dry
So,
cleaning.
same thing as buying clothes. Then like you're saying, you're grooming, because it's like, you know, if I go show home, say
You're
if
not gonna
I
be
go
naked.
like in shorts, in shorts and sandals, you know, as to, you could go buy your nice, you know, polo and slacks and all that stuff. So that will be part of your, you know, not uniform, but looking professional, just like grooming yourself.
I mean, some of it, you know, if you're my client, I would tell you, look, this is a gray area, I have no problem doing it.
Yeah.
But if it gets looked at, we're gonna have a little
The
fight on
company?
it.
Yeah.
You know, half your clothes.
You know, my theory has always been, as long as you pay taxes like on a yearly basis and you pay your fair share, I think you go, well, but you say they do it randomly, but you know, as long as you pay your taxes and you don't claim, you know, way
You
over,
go way over,
yeah.
something like that.
But I mean, he can help you do file the tax, you'll do it,
How much do you charge Steve for, corporation,
Tax return?
pay, account payroll? He wants to know.
No,
That's what.
Ask him, ask him.
no, not a payroll, but the
Bookkeeping,
bookkeeping. Yeah.
You see, you know what I'm asking?
$100 a month,
Okay.
then it's all done for you.
And you're in charge to start the corporation,
Say it again?
like,
You don't charge to start a corporation?
No, just whatever the state fee is, that's what you pay me, and I pay the state.
Normally it runs what?
It's $543.
Okay. Okay, so I think you will be
I thought it was
hearing.
$800.
That's the tax you gotta pay every year.
Oh, yeah.
But to set it up.
Le digo que la mejor nos va.
We're the only state that charges
Nos va a ir
$800 a year.
cuando
Set up an
sería-
appointment with him, guys, definitely.
when is a good time to switch from,
From CPA to CPA.
yeah,
Anytime,
anytime?
doesn't matter. Unless you're doing,
But see, but the other guy is gonna delay to send you the information that we had with him.
Will you need some information from the other
Sure.
CPA to start the business? I mean, to continue?
I
mean, to
just need,
start-
I would just need a copy of your last year's tax return, which you probably have, right?
Yeah.
It's not, but I mean this year.
No, you can start like tomorrow or today.
Okay.
All he needs is a copy of your taxes you already
No,
filed.
Last
no,
You should
no,
have a copy.
no, but what he's saying is all these
2018.
months, he's been providing to the current CPA, he's been
Information.
providing the
Income.
financial information.
Is he giving you financial statements?
Don't you have
Like a
copies of
profit
everything you
loss
have
or
provided
anything like
him?
that?
Don't you have
Profit and
backups?
loss.
Profit and loss.
Profit and loss.
No, but don't you have like all the receipts, all the bank statements, everything that you have provided to him, do you have like a backup to give it to you, right? Or is that, am I
Well,
saying
it
wrong?
depends, I mean, if he's doing something for what you're giving him, if he's giving you a profit and loss statement, you just give me that.
That's it?
Yeah, and then you start giving me the receipts and stuff. Is he doing your bookkeeping? Is that what
Yes.
you're telling me?
Yeah.
So he must have given you some type of profit and loss to show how you're doing or
Has he?
whatever.
Every month?
Every month, every quarter, however you give it.
Yeah.
So you just wanna give me the last one that he gave you, and then any receipts and stuff over and above that.
Because I thought the best, month is December, but I don't know. To start
To
fresh
wait,
and
to
remember.
wait to transfer it, no, like you said, now.
I mean, to me, it doesn't matter.
Say.
I do it every day.
It's up to us,
Okay.
us.
Just, I know you're right, it might have a little bit of conflict if he has not given you like any of that information, providing information on.
Okay, have you provided, I'm sorry, I'm asking him because he's the one that's been handling, have you provided him like all the receipts that we have kept? Can we get him back?
Well, sure, she's asked for them. But they're yours.
We're just gonna be honest with him that we're gonna switch CPAs. Nothing's too high.
Now, is, if
Nothing.
you're using that same CPA, is that the same guy that
Mhm.
will?
Mhm.
Is it up here?
Local,
Yeah, it is.
it's local, it's local, it's local.
What's his name?
Roberto. He's on Pande Boulevard and
Roberto, que,
almost across the street from Camacho.
What's it? 15th Street East?
Yeah.
What's his last name?
Roberto Venegas.
No, I mean, it's your stuff, he has to give it to you.
¿Qué va a decir?
Oh, no, because I met him, great guy, but, you know, you gotta compare the experiences, you know, the knowledge and.
oh no, I think you are the best CPA for our needs. And then based on the experience from other agents, you know how